I'm Sean Power, Financial Market Analyst at Capital Markets Elite Group, and in this video we'll give you a brief introduction to continuation patterns using candlestick charts. So let's take a look at continuation patterns using candlestick charts. So as the name suggests, we are looking for a series or a pattern of candlesticks that indicate the current trend, or the trend that has been driving the market, is set to continue. So on my screen here I have a chart that's a cable 4 hourly, so each candlestick denotes a 4 hour period, and as I say, we're looking for a signal that indicates the trend is set to continue. So we have an uptrending market here, pretty crude trend line there, but what we are looking for is a series of charts to indicate at some point this is set to continue. So if I zoom in, we are going to look at the rising 3 formation, and what that is a series of candles that generally is 5, but it can be more, and the name rising 3 is because there are 3 candlesticks in the middle of the pattern that we're looking for. So again, this is an uptrending market, and a rising 3 formation, if I zoom in, is indicated by a large initial candlestick as seen here. So the initial candlestick that should be on the light is a large move in line with the current trend. So we had an uptrending market, we have a large up day, or in this case a large up period for a 4 hour period, and then we have a sequence of 3 small down days that follow that large up day. A key point here is that the 3 candlesticks that follow the initial large up candlestick, the large bullish candlestick, is that these 3 subsequent negative periods or sessions trade within the body of the initial candlestick. On this one, we don't really break below the halfway point of just a tad below, but that's for me that's a real bullish signal, because the price action here is that the buyers have had a real strong day in line with the current trend. They take a bit of a breather. Some sellers try to force it low without any real impact on the initial candlestick. So they've tried to, over 3 sessions, in this case 4 hour sessions, they've tried to force it lower. They've not really made an impact, and then the bulls or the buyers return and force the market back in line with the trend and back above. And the final key point here is that the close on the 5th and final candlestick, the close should be above the high set on the initial bullish period. So we have that large up move. The bulls or the buyers take a bit of a breather. Some sellers try to make an impact, don't really have any impact on this initial candlestick. Then the bulls or the buyers return, force it higher, and we get a close back above the previous high set on that first candlestick. So as you can see, if I zoom out a bit here, the trend was an uptrending market. We had a large up day at the top of that trend at that point. The bulls understandably were a bit wary at the top of that market at that point. Sellers couldn't really force it lower. They had no real impact on, made no signal that the sentiment was changing or the trend was changing. So the bulls returned, forced it higher, and then off we go again. We get the continuation pattern, so the trend continues. A couple of points here is that this one is almost picture perfect, but you may find that in the middle there may be a 4th or a 5th candle. But the key point is you get a large initial candlestick, a series of candlesticks that are opposing direction to the first, and make little or no impact on this day's range, as it were. And then you get a final candlestick that breaks back above the high and continues the trend. So that's a rising 3 formation. And there is an inverse one, so you have a falling 3, which would be a large down day followed by a series of small up days with little or no impact on the initial candlestick, followed by another large day down that the low breaks the previous low. And just again, sort of zoom out and have a little look at this. So if I draw a channel, we have this. Remove that trend line that I crudely drew. We have this uptrending channel. Again, I've sort of missed a bit there, but we have this uptrending channel and this occurs right at the very top. So the continuation pattern occurs at the top. So you can kind of get an idea that if we zoomed in and we didn't know the sort of rest of the move, once this has reached here and we're reaching the top of a channel, there's understandably some a lack of real initiative for the buyers to convincingly break through. So they let the sellers have a small turn in the market, see if they can change the impact or the direction. They don't really make much impact, and then the buyers return and force it. And as you can see, it breaks away from that channel for a bit, but then returns to the channel, and that uptrending channel continues. So that's a continuation pattern. That's the rising three. We've highlighted that and indicated the opposing one, so the falling three. So I hope you found this useful and you're aware now of how to look out for a continuation pattern, that the trend is set to continue. And I hope you found this useful, and please do check out the rest of our videos.